Namaskar and welcome to our weekly commodity audiocast. Whether you are a seasoned trader or just starting out, we have got the insights and analysis to keep you ahead in the dynamic world of commodities. I'm your host Ravindra Rao from Kotak Securities Commodity Research Desk. And like in each episode, we will share valuable insights, trading setups, and explore the latest trends shaping the markets. So get ready for a deep dive into the fascinating realm of commodities trading. Mixed signals in the U.S. last week has on the economic front has sparked speculation on rate cuts, and this has impacted the global markets. The U.S. economy is displaying signs of cooling momentum, creating a delicate balance between hopes for rate cuts and cautious sentiments expressed by some Federal Reserve officials that have tempered market optimism. Earlier in the week, the dollar slipped to a four month low of 102.60 as two of the most hawkish Fed officials signaled a possible pause in rate hikes, reinforcing the belief that current cycle may be completed. While several other Federal Open Market Committee members acknowledged the restrictive nature of monetary policy, they generally expressed support for maintaining interest rates without an immediate readiness for rate cuts. The greenback rebounded to 103.59 by the month end, easing weekly losses but still closed November with a notable 3% decline, marking its largest monthly drop in 2023. The easing of inflationary pressures and a slowing job market have intensified expectation of a potential Fed pivot. Despite a robust 5.2% annualized growth in Q3 GDP and a 3.6% increase in consumer spending, in the US, recent data reveals a slower pace of core PCE rising 3.5% year on year in October, the slowest since April 2021. Jobless claims also increased, with continuing claims reaching a nearby 2 year high of 1.93 million. These factors, coupled with a probable month end demand, have fueled speculation of a Fed shift in the face of changing economic landscape. On the commodities front, COMEX Gold prices experienced a notable surge, reaching a 6 month peak at $2,073.2 per troy ounce during the previous week, closely approaching the all time high of 2089 achieved during the pandemic. In today's today's early session, gold has breached the all time highs and it went on to hit a high of around $2,150 per troy ounce, but has slipped from that level and is currently trading close to 2,106 per troy ounce. This upward movement is mainly driven by a simultaneous decline in treasury yields and the dollar index. Simultaneously, MCX gold market last week had an unprecedented high of 60 rupees 63,356 per 10 grams, partially attributed to the weakness in the domestic currency. The precious metal secured its third consecutive weekly gain, contributing to a second consecutive monthly increase in November. Market dynamics are influenced by anticipation of Fed rate cuts in early 2024, further enhancing the appeal of gold. Silver mirrored gold performance last week, recording a gain of 5% for the week. From a technical standpoint, gold closed in proximity to its historical highs, approximately $2,089 per troy ounce. Given the presence of multiple resistance zone, a breakthrough and sustained closure above $2,089 per troy ounce threshold could empower bulls, potentially propelling the price towards the next resistance zone of $2,200 per troy ounce. In fact, it has hit a high today of around 2150, 2152.3 to be precise. But it has to sustain about 2090 $2,100, and if that happens, we are set for the prices testing $2,200 per troy ounce. In case of silver, as we had mentioned in our earlier podcast, an inverse HNS pattern that got breached in mid-November has almost tested 50% of our target. We expected it to test around $27.40, and it has already tested 26.34 today. So more than 50% of the target has been achieved, but a strong resistance is close to 25.90, 25.95 in case of COMEX, and if it sustains above that, then we might see prices going higher towards 27.40. Today it had moved up, but then it has also corrected from the highs and is currently trading flat near 25.91. So it has to sustain about 26 to 26.30 dollars on the higher side, and if that happens, we might see it jumping towards 27.40, which is our inverse HNS target. Coming to crude oil closed the week around 1% lower, near 74 per barrel, amidst skepticism and confusion surrounding OPEC Plus announcement of approximately 9 lakh barrels a day in fresh output cuts from January. Market sentiment suggests concerns about the cartel's output being sufficient for a slowing global economy, contributing to the decline in crude oil prices. On the price action front, crude is trading almost flat near $74 per barrel. We still expect that the prices has to breach 72.50, which is the breakdown candle registered in mid-November. After that, we had seen some bounce back towards $78-79. Prices have again corrected, and if it reaches $72.50 on the lower side on a closing basis, then we might see further slide in prices towards $70 to $68. Till then, we expect a range bound movement. On the upside, $78 should be the cap, and on the lower side, 72 to 72.5 should be the ideal floor. Finally, in the industrial metal sector, except for copper, prices closed lower due to a rebounded dollar and mixed PMI figures from China. The contrasting data emphasizes the need for additional stimulus support from Chinese policymakers. As China's official manufacturing PMI fell for the second straight month, while Caxin manufacturing PMI surprised on the upside. Notably, a bullish engulf pattern in MCX copper future contracts for a December delivery has been confirmed, with bulls eyeing the next resistance near 742, 750 odd levels. On the lower side, 703.45 is the pattern low, which would act as a support. Below that, the pattern might negate. Otherwise, we expect an upward move in copper might start very soon. Looking ahead, the US ISM Services PMI and jobs data in the week may test market nerves, with the potential for unexpected resilience to prompt traders to recalibrate their rate expectations. So we have to keep a close watch this week on especially the precious metals, because gold is trading near the lifetime highs, silver is trading close to the resistance. If these are breached, we might see a sharp upside in both the metals. So these two metals might trade pretty volatile, and in case of base metals, copper, as I mentioned, there is a bullish engulfing, so we might see some positive action in copper as well. So as we wrap up another insightful episode of Commodity Audiocast, we hope you have gained valuable insights to enhance your commodity trading journey. Remember, the markets are ever evolving, and staying informed is key to success. Feel free to connect with us on social media, and don't hesitate to share your feedback. Until next time, happy trading, and may the markets be ever in your favor.